Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 11th of October to Friday the 15th of October 2021. Right, we've written up the weekly flows to get us underway then. So for the period, euro dollar plus 30, so over that period, the 11th to the 15th, the euro dollar as an FX pair gained 30 points or pips, euro yen plus 273, euro pound minus 58, pound dollar plus 132, pound yen plus 416, and the dollar yen plus 205. Plug that into the formula and you get a negative unopposed driver in the yen at minus 894. No backdoor flows. The opposing positive flows mainly going into the pound at plus 606, into the euro at plus 245, and the dollar is the positive rock at plus 43. Activity plus or minus 894. So over last week then, we had basically the yen driving negatively to the exclusion of all else in the majors. So we'll stop it there and write up the asset classes, so don't go away. Right, we've written up the flows then. So US dollar index, basically it's pumped up, it came back, it's now 0.25 from the high, it's 25% off the high, so the dollar has come back a fair bit. Gold should in theory like that a little bit, but it hasn't been basically reacting. Gold is 0.38 from the floor, 38% off the floor, under half marks. Oil did this big break. It's now 40% above the resistance break. So in model terms, so it's 0.4 above the resistance. Wall Street, S&P Tech, they've all got this same look. The market went up, it came off, and it's now recovering to a certain degree. And Wall Street is 0.20 from the high. S&P is 0.28 from the high, and the tech is 0.42 from the high. So Wall Street's 20% off the high, S&P 28%, and the tech is 42% off the high. So basically you've got this Wall Street leading the way in terms of model flows. Next the S&P, and the tech is lagging. Right, US 10-year and the bund, this is the price. We had this breakdown in the price of US 10 years. And now it's pretty much on the floor, so yields are strong in the US, and bund likewise we had a breakdown, but yields have come back, and there's a gap really now between the US 10-year and the bund. The bund is 0.25 from the floor, so the price has come up considerably on the bund. Therefore the yields have relatively reduced. Right, copper been charging around, it did that break. It's now 0.33 above the resistance, so it's broken 33% above the resistance basically in model terms. And US steel bumping around the floor, but it is starting to come up. It's up a fifth, 0.20 from the floor. So what's going to knock it about next week then? Right, we've got Sunday the 17th, we've got New Zealand CPI. Monday the 18th, we've got China GDP and retail sales. And just looking over the horizon a little bit, we've got Wednesday the 20th, China rates decision. So it's light in terms of European and US data, but we've got New Zealand and China data punching through Sunday to Wednesday. So we'll stop it there and write up the data cycle and then do the analysis. Right, we've written up the data cycle then. So in China is mixed. It's tier 1 is weak, negative. Tier 2 is positive. The dollar, tier 1 is neutral. Tier 2 is very positive. Germany, tier 1 negative. Tier 2 negative. Euro, tier 1 positive. Tier 2 very negative. Yen, tier 1 neutral. Tier 2 negative. The pound is neutral. CAD is tier 1 neutral. Tier 2 very positive, AUD tier 1 positive, tier 2 negative, NZD tier 1 positive, tier 2 negative, and the Swiss is neutral to negative. So to summarise that then, you've got massive tier 2 strength in the dollar, you've got nasty tier 2 weakness in the euro, and you've got strong tier 2 strength in the CAD, and you've got neutral to to positive or negative in the others. So basically, you've got this. You've got a strong tier 2 dollar, a weak euro tier 2, and a strong CAD tier 2, and the rest is sort of floating around in the middle. Right. So if you look at the majors, then, so we've got dollar, euro, yen, pound. We've had the yen negatively driving for quite some time. It's the unopposed negative driver in the majors. So it's nearly 900 points have come off this complex this week, 894 I think it was, and the previous week it lost 506. So that's 500 and 900 is 1400. So 1400 points have come off. And the previous week before that it was about plus 176, so call it 200. So the yen complex has lost about 1200 net 1200 points or pips in the last 3 weeks. So that gives you some context. The dollar's sort of done this, it's started to come off a bit. The dollar index is what is it? It's about 0.25 from the high. Right. So and the pound has been gaining the bulk of these positive flows off the back of euro weakness, yen weakness, and the euro's been what is it? Let's have a look. The euro's been the next port of call for the positive flows, but it's been backdoor flows, and they've been struggling really. So it's had this sort of effect. And then if you look at the commodity currencies, the CAD, the AUD, and the NZD. The CAD, is benefiting from this oil push, and it's got a strong data cycle here, so there's no reason to not understand why the CAD isn't doing well. The AUD's neutral to soft, and the NZD is neutral to positive, quite frankly, and that's where we are. And the Swiss has been soft as well. So going forward, then we've got this fairly weak data coming out next week early on. We've got China, New Zealand, and sort of China data, China rates, etc. And likelihood is that equities are going to go up to their previous highs. If you look at the equities, then we've got Wall Street is 20% off the high. S&P is 28 and the tech is 0.42. Now, the likelihood, given this scenario, there's not much to rock the boat there. So the likelihood is we're going to be seeing at least these highs being regained in equities, which will put further negative pressure on the yen. Remember, the yen's got a net position of about about 1,200 points. And modelling looks at the yen's got potential to go 1,800, minus 1,800 to 2,000 points as a complex move. So we've got 600 yen points maybe to come off next week before we start thinking about calling a floor in the yen. So that's where we are. And looking at the bond yields. The euro is not flavour of the month, so the likelihood is the pound's gonna get these positive flows as it has been, but it's likely to be getting the positive flows out posing from the yen. So you're likely to see pound strength next week, yen weakness, equity strength. The oil market is likely to carry on steaming up. You've got this. You're now getting a bit of a softer dollar environment, which commodities will like. And copper. What was copper doing? Copper was. Let me look. Has broken out 33% from the resistance. So copper's starting to go as well. So it looks like we're going to be sort of fairly risk on. Equities probably regaining their highs next week, and interestingly, the tech is lagging. Now there's a very good trade brewing for the tech versus the S&P coming up. We'll talk about that next week anyway. But anyway, suffice it to say, when you get a disconnect between the S&P and the tech, there's potential for doing well. Right. So that's where we'll leave it. Hope that was useful. See you Monday for the daily briefing. Thanks for watching. Goodbye.